Hello and welcome to the ISE Equity Index Outlook for June 25th, 2012. This is Patrick Sresna. As always, we put up a chart of the S&P 500 using that spider exchange traded fund symbol SPY. We were looking last week for this entire rally to end in a rising wedge that should find overhead resistance in the not only in the 34-35 focal point, but we suggested it could even go as high as the 137 level in a natural retracement. At this stage, coming in on Thursday, we had a very strong reversal on the downside, which may have at least temporarily stalled any chance of any higher movement. Now, it's still too early to officially call it a reversal, but this is how those begin. So we'll be watching whether or not the Monday and Tuesday can see the market rally back toward the 136 highs. If we see any failure of the market to follow through on the upside, it could almost immediately lead to new rounds of selling that at minimum would be retesting the lows at 128, if not opening the window for drops even down to 127, 126, or even 124 on the downside before we see a short-term bottom. In the bigger picture, we do believe that the further weakness was inevitable into July and August. It was just a matter of how long it took the market to put in some short-term highs and resume selling. So at this juncture, we're going to be observing where and when that little short-term high comes in and looking for a new full leg lower at some point going through the month of July. Next here I want to take a look at the ISE Water Index, which is a symbol HHO, and this actually has very similar characteristics to the S&P 500. While this distinctly put in a head and shoulders top along the very highs, right now that rising wedge looks very similar to that of the S&P, including the reversal. And in the end, this index is showing a very high correlation to the market. So if our outlook on the S&P 500 has any merits, then the water index will certainly follow suit with a sell-off not only back down to the 82 to 84 level, but there certainly is room for returning all the way back to the November lows, which lie in that 75-76 area on the downside. At this stage, again, it's too early to officially call Thursday of last week a reversal, but that's how again they potentially do begin. So we'll be watching early this week whether Monday and Tuesday bring about any rebound buying, which can make it back to the previous highs. But any failure to break those previous highs on the upside will certainly lead to new rounds of selling. Next here I want to take a look at the ISE Global Platinum Index, which is symbol ORE, and the Platinum Index has been particularly weak. This chart doesn't even demonstrate the substantial weakness that we saw in 2011 on the downside as this index came from levels up in the 150 to 170 level on the upside. Nonetheless, the predominant weakness continues to dominate as a new round of selling has really come in on Thursday and Friday, and the Platinum Index pushing all the way back down to its previous lows right along the 70 line with this small consolidation pattern. If this Platinum Index doesn't put in a double bottom and bounce right off this very level, a new round of weakness is likely to occur, and inevitably that leads to a measured move downside target down at the 55 level on the downside. But obviously the final moves can be a little bit shorter, so there's always a chance the 65 or 60 level will mark the short-term lows if it breaks to a lower low, but the completed measure move goes all the way down to 55 on the downside. Finally, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and the natural gas index has been consolidating for the last month in a very sideways range between the 85 to 95 range. Really at this stage, from a commodity perspective, natural gas has seemed to bang out a bottom. This is going to make it a very interesting thing to see whether or not the natural gas stocks will follow suit. Really at this stage, with the broader weakness in the markets, there could be sympathy selling in the natural gas stocks on the downside, but for a better part of the first half of the year, natural gas stocks have sort of moved independently of that of the broader stock market. So there is a room for these to move on their own as opposed to necessarily moving with the index. At this stage, we'll be watching whether that 85 level on the downside breaks, because any downside break of the natural gas index leaves room all the way down towards even the 70 level on on the downside. Again, but I'm a little more skeptical about the downside risk to natural gas than I am the other indices, as again the commodity itself has already bottomed, and there is a chance that these stocks may start to move independently of that of the broader market. That was your ISE Equity Index Outlook. Thank you for joining me.